Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the slightly late running, my apologies, slightly late running Bull versus Bear webinar on today, TGI Friday. TGI Friday the 13th. Woo, Friday the 13th. TGI Friday the 13th of December 2024 as we're coming closer and closer to the end of the year. So welcome everyone. We're going to go for our usual regular run through. We'll take a look at the calendar, what we've had, what we've got coming up. Take a look at what are those macroeconomic, fundamental, geopolitical events that are shaping financial markets right here, right now, what we've got coming up today, and take a quick look at the charts and the levels. So first of all, actually, let's look back. Let me dupe this one out and then look back before we look forward. Yesterday's main event was the both a interest rate cut from the SMB and an interest rate cut from the ECB. So interest rate cuts in Europe yesterday. And markets in here, not significantly massively, they were expected, or the ECB certainly expected. So not a huge reaction to that, but then certainly the ECB now almost earmarking, we'll talk about it as we go forward, and potential further rate cuts at the next two meetings as well. So certainly a very dovish tone being put forward in here by the ECB and expectations for further rate cuts going forward. So it's interesting to see how that adds up for the Fed as we go into next week's meeting for the Fed. Looking into today, we've already had some UK data in here. You can see a sea of red from the UK. On the GDP, industrial production, manufacturing production data, missing expectations. This is part of the why UK, Europe in here kind of underperforming what they're seeing in the US. So more likely we're going to get more aggressive rate cuts in UK and Europe as we go into 2025. If we look at going into today, there's nothing really of any real note coming out of the US. This has I don't know what they're doing with. Oh no, they've got it now in here. So. We do have so tech stocks rally as chipmaker predicts AI sales boom. So we did have a dip back lower yesterday. We had the really strong performance earlier in the week in here, pretty much being driven by initially the Willow chip out of Alphabet/Google, and that's helped drive markets higher. A bit of a pause yesterday, and the markets kind of set back. Nasdaq sort of took a bit of a breather and a slight dip, but we're leaping higher in futures this morning. A positive end to the week in here, and pretty much being driven by Broadcom in here. Chipmaker Broadcom expects 65% growth in AI product sales this quarter. So very positive from Broadcom this morning that's seeing futures markets leaping higher, led by the tech. So already reversing yesterday's gains, and that's really the headline, the Broadcom announcement this morning. So a real positive there, and obviously pushing into other tech stocks and the whole AI sector. Investors parting to stock in early trading, offsetting the blow from yesterday's news that Apple, one of the biggest customers, plans to replace Broadcom's wireless chips with homegrown tech, code named Proxima. So a negative for Broadcom there, but then a reversal of that overnight with their positive guidance in here. So all very positive going into today, into the end of the week in here. Donald Trump plans to renew tax cuts for households. Must transfer around most of its millions to his own entities, so not good in here. Long-standing feud with the SEC, where the agencies is investigating his brain-computer interface company Neuralink. So some conflicts of interest potentially coming up for Elon Musk. But anyhow, the main news this morning is the rebound in the whole tech area, with the markets having dipped yesterday, being driven by chipmaker Broadcom this morning. And we've got further on that in here. So look, Broadcom jump set to extend Wall Street rally. Wall Street. So overnight, obviously, we were lower. So Wall Street closes lower. This was yesterday as investors assess data after recent gains. And again, look, Wall Street puts rally on hold. This was from yesterday in here. The other thing to note is Treasuries going down in price, higher in yield. Okay, and that lower prices, higher yields should be negative from pretty much like from the 5s out to the 30 years should be kind of somewhat negative, potentially negative for stocks in here, but when it's not having that effect at all. Trying to see Fed rate cut next week, and given after the ECB and the SNB cuts that we have had. So again, going into this morning, there were Wall Street near records of central bank ends 2024 with rate cuts. Those are the 2 rate cuts. Broadcom jump set to extend Wall Street rally this morning in here. And then Nasdaq future lead advance on Broadcom's upbeat forecast. So all of that positive. US data is Fed striding towards rate cut next week, so anticipation of that, but tiptoeing into 2025. This is going to be critical to next week. We'll focus on it a bit next week. We do get the updated Fed economic projections take center stage this week. That's right. I've been thinking about this a lot. This is going to be critical. The rate cut is pretty much priced in now. 25 basis point rate cut. Inflation is sticky. What are the Fed going to do next year? Obviously, the US economy is relatively firm, okay, particularly compared to elsewhere on the planet, particularly if you compare to Europe and the UK. Not that the European and UK economies are struggling, but you'd argue the US economy is pretty strong, but inflation remains sticky. So are the Fed justified in being aggressive on rate cuts? Probably not. But are they going to cut rates? Yes, probably yes. In case there's not in case of because of concerns around still that there could be a hard landing. And then in here again, look, ECB, and you look prepare for quarter point rate cuts at next 2 meetings. So having had that rate cut just yesterday, the ECB signaling that they are probably going to also do quarter point cuts in January and probably also in March as well. What does it mean on the overnights in here? Well, actually Nikkei was down 1% and the Hang Seng down 2% overnight. European exchanges in here actually rebounding. So we're up about 1/10 on the FTSE despite the negative UK data today, and about 1/4% up on both the German DAX and the French CAC. And if you look at the US futures, having set back yesterday, we're rebounding strongly this morning. So up 0.75% already on the Nasdaq. The S&P up about 1/3%. If you look at the Fed Watch tool in here, look, boom. This was growing anyway through last week and into the beginning of this week. Now we're basically nailed on nearly 100% for a rate cut of 25 basis points next week. But what's going to be critical as we move out to March now. So having priced in 1 rate cut, now we're pricing in by March, potentially now. Looking at 1 more rate cut, only 1 more rate cut come March, and by the summer, July, in here. So we're here, what's this for? So it's kind of even Stevens in here between here, whether so 400 to 425. That's only 1 more rate cut. If given that the next one in December is priced in, we've got pretty much now, and then only 1 rate cut all the way through the summer, or potentially 2. So it's 1 to 2 rate cuts into the summer, and if we go by the end of next year, then the chances are we will get 1 more rate cut. So the market only really pricing in 2 rate cuts for 2025. Okay, so 1 maybe the first part of the year, and then 1 maybe towards the end of the year. So the market is very, very. I would say the market is fairly hawkish. It's not dovish at all. It's not pricing in any kind of aggressive rate cuts coming out of the Fed. And so it's going to be that dot plot chart, those economic projections in here out of the Fed are going to be super important to be watching. We could have some real volatility next week if the Fed start to shift more dovish than the market is in here, and the market has to play a little bit of catch up. As we said, the market's moving on the bond side. This is the US 10-year yield moving to higher yields. Just a significant move up to a march up to higher yields, almost getting back to the higher yield points that we saw back in here in November. And that's significant. The equity markets are managing to rally even though we're going high in yields. And you can see we were bullish in here. We've moved over the last few days into more bearish on the 30-year, the 10-year, the 5-year. It's only on the 2-year that we're kind of hanging on. The 2 years, we've not really seen this lower price, nowhere near as much lower price, higher yields. And remember, the 2-year, the short end is more attuned to what the central bank are doing, in this case the Fed, and the longer end more attuned to what the economy is doing. Okay, more of a reflection of the economy. On the indices, we can't be anything but positive in here. Yes, we had a little bit of a dip lower yesterday on both the Nasdaq and the S&P, but obviously we're making new highs as we go in here today. So the Nasdaq in here, as you can see, right back up at the highs we posted back on Wednesday, despite that small dip we saw on Thursday. rebounding and making new highs now today. And you can see it's held above this 13 period EMA all the way up in here. And the ES in here was flirting through this week. We've backed off. ES underperformance in here, as you can see. Nasdaq's at new highs, going back to the Nasdaq, making new highs all through this week, made new highs on Wednesday and making new highs again today. The leadership fully back with the AI boom back in force in here. What with what's gone on with Alphabet and now Broadcom in here this week. So the broader market lagging in here, but nevertheless, we had an inside day setback, went down to that 13 period EMA. Look at how well that's held all this week. Tuesday, Wednesday, Thursday, we've held at that 13 period EMA, flirting with it and rebounding, and again rebounding this morning. So I think we're the S&P, we're back up to potentially the highs from this week. So back up towards the 6100, 6105 kind of area, and Nasdaq can easily make new all-time highs. And obviously checking in with the Fibonacci extension levels we've got here as upside potential targets as we go into today. So looking bullish as we go into today, bullish end to the week in here. As we head into next week, all the focus is going to shift onto the Fed and particularly that dot plot chart. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. Have a great weekend as well. We'll be back with you with another Bull versus Bear webinar on Monday. Bye.